Greetings, members, one and all of the Salivation Nation. Gold's chance to break out next week. Let's explore. You are now looking at the gold and silver prices ending out the week, with the markets about ready to close down for the weekend, the long weekend. Obviously, the foreign markets will still be open up on Sunday night. We'll still do our market watch on Sunday night. More than likely, I don't know, Sunday night is July the 4th, so I'm not sure, but nonetheless, it'll be very interesting to see how the markets will react. But so far, gold and silver are clawing back some of their losses, and we can see gold is up almost $12 an ounce here, 1789.20, 1789 being the year that George Washington was sworn in as president. Silver is breaking out here a little bit, up over 1.58% increase here, up 41 cents. Silver is now above $26.50 for the ask price. Platinum and palladium have both taken a move in positive territory as well, with rhodium taking a little bit of a drop earlier. It is now under 20,000, 19,400. But gold has a chance to break out next week. And I will just say as a disclaimer, typically when we see a couple of days of downward movements or a couple of days of upward movements, well, then you're going to get articles that reflect that trend line. And that is the case here with this one. But let's see what they're talking about here. Take everything for a grain of salt. Again, this is its chance to break out. Doesn't necessarily mean it will. Gold could see a significant rally above $1,800 an ounce next week after the release of the Federal Reserve's June monetary policy meeting minutes, analysts told Kidco News. One of the biggest events to watch next week will be the Federal Reserve's monetary policy meeting minutes. The meeting, which took place already a couple of weeks ago in mid-June, triggered a significant sell-off in gold. But that same meeting and the meeting minutes could actually cause gold to go up. It's very interesting. Markets are expecting a hawkish tilt, and anything that tells us there's no hawkish tilt is a little bit less than people were pricing in. You can get a big rally in gold, TD Securities head of global strategy Bart Malik told Kidco News. Market participants will be closely monitoring whether the hawkish comments made by some of the Fed members during last week's matchup with the notes from the meeting minutes. FOMC meeting minutes are interesting in the event if they contradict anything that we've heard from the Fed so far, especially from some of the more hawkish Fed members, said Gainesville Coin's precious metal expert Everett Millman. Gold is ending the week on a very strong note as prices are once again trying to breach the $1,800 level following a mixed U.S. employment report. We're about $11 away, just over $10 away from that now. We got 850,000 new jobs added to the economy in June, but the unemployment rate went up to 5.9%. The participation rate was also still very weak, which means there's no particular impetus for the Fed to tighten monetary policy anytime soon. And that is good for gold, Malik said. We're also seeing wage growth slowing, and that implies that inflation is likely transitory, and there's no big reason for the Fed to start raising rates. It's still not clear whether there is enough momentum to propel gold much higher next week, but Malik does see prices returning to $1,900 an ounce in the next 6 months. And I'm actually still maintaining my position that we could see $2,000 gold at least sometime before the end of the year. Another driver to watch is a movement in the oil price, added Millman, noting that any additional price hike will end up working in favor of gold. Well, it's already reached a new high. I think it's like $76 a barrel now. I'm interested in what happens at the OPEC meeting. Uncertainty around oil could have big implications for inflation, and that is still one of the main drivers for gold, he said. If they come to an agreement to limit output, that could push oil prices higher. Some say we could see $100 oil again by later in the summer. Higher oil prices feed into higher inflation, and that is positive for gold. We know there's going to be more demand as more people are out traveling, going on vacation, especially with things opening up again. It's interesting in the case of Russia as well, which is such a big OPEC player. Russia is reliant on energy markets for its economy, and it hasn't been buying gold lately. If oil rises, the country could see extra funds and possibly start purchasing gold again. And that's going to push gold up too. We know other central banks are buying gold. You've seen me cover that on this channel. Acquisitions of gold for 2021 by central banks are on the rise. It's been one step forward and two steps back, said Walsh Trading co-founder Sean Lusk. Gold couldn't hold $1,800 and went down to mid-April lows of around the 1760s. Now we are popping back up on unemployment data. Everything screams inflation, but the problem has been the rally in the U.S. dollar. That's the key, folks. That's the key. Really, in the end, it all comes down to the strength of the dollar, that dollar index. And by strength, I'm talking about in comparison with other currencies, especially from the breadbasket of currencies from the IMF. That is key. Does not necessarily mean that the dollar's not losing value. It is by design, and in this case, more so, to the tune of over 5% from the measure from the CPI. Lusk is optimistic for July because of gold's seasonality coming back. We're coming back into traditional gold buying pattern in mid-July. The wedding season takes hold, especially in India. There is a buying bias. Cyclical trade is entering back into the market. A breakout above $1,820 next week would open the door for another rally in gold, said RJO Futures senior commodities broker Daniel Pavilinis. If we close above it, gold could go much higher and even make new highs. What are we going to be watching for? According to the article here, it will be a fairly light data week due to the U.S. celebrating Independence Day. Aside from the Fed's meeting minutes on Wednesday, markets will be paying close attention to the ISM non-manufacturing PMI on Tuesday and jobless claims on Thursday. Remember, we got a mixed bag last time the job numbers came out, and it wreaked havoc on the markets for sure. We saw huge rallies. But the ISM Services Index is probably the premier number and should show the sector is growing very strongly with increased business opportunities thanks to the reopening. From the ING Chief International Economist James Knightley. So very interesting. There's some information there that could definitely prove positive. We'll see. The markets will do what they do, and they are certainly rising right now. And we'll find out as the week starts off after Independence Day and some of these minutes get released, see where we'll go. Nonetheless, no matter what, the fundamentals have not changed for gold and silver. But we know that in times of economic stress or concern or worry, prices tend to rise. And we know that the dollar, for all intents and purposes, it is definitely under stress these days. No matter what the dollar index will tell you from 1 week or 1 day to the next. So therefore, we will continue to press on. And if you're not buying precious metals, the precious metals that you do have, it would be wise and incumbent upon you to hold on to those precious metals. That's really the bottom line to wealth preservation, is holding on to them. Unless you need to sell, or if you've found the bargain and find a way to be able to profit from your precious metals to make a more strategic investment or what have you, hey, there's different reasons for selling. By and large, I think the least amount of risk comes in holding on to the metals that you have. And I certainly am one of those that believes in buying and using smart dollar cost averaging in order to purchase precious metals. So there you have it. Let me know what your thoughts are in the comment section below with this end of week update here. And as everybody prepares for a holiday weekend celebrating the independence of the United States from Britain, and the freedoms that we enjoy. A multitude of gratitude to you all for taking the time to watch. I want to encourage you to please, well, just thanks for being here. How's that?